Well, thank you very much for that introduction. I'm going to start off today just giving a little bit of background on myself and our company. So I live in Sudbury, Ontario, Canada. I've been there since about 2000, so about 25 years. Been in the mining industry for about 29 years. And Sudbury has been dominated by two major mining companies for the last 140 years. And it's a long-lived mining camp. And those two companies were Inco and Falconbridge, which are now Vale and Glencore. So I worked for Inco from 2000 till about the end of 2004. And in 2002, a junior mining company came into Sudbury and were able to acquire 5 non-core past-producing mines from Inco. And in 2003, we're able to restart the McCreedy West mine and make some discoveries. In 2005, I joined the team there to lead the operations at the McCreedy West mine and then Levack mine next door. And we were very successful. We also restarted a third mine, the Podolsky mine. And by 2010, we were the best performing stock on the TSX of any company from 2000 to 2010. We were acquired, of course, with great success. Attracts a lot of attention. So we were acquired for $1.8 billion in 2010 to become Quadra FNX. I stuck around for about a year after that with Quadra FNX before moving on. And about a year after that, KGHM out of Poland acquired Quadra FNX for $3 billion. And primarily for a large copper project that Quadra FNX had in Chile. So I remained in Sudbury, and by 2015, I had recognized that these mines and these properties that were created so much value within a junior company in Sudbury were now non-core to their current owner, KGHM. And this is what inspired me to see an opportunity to recreate that entrepreneurial spirit with another junior company acquiring non-core assets from the majors in Sudbury. So founded Magna in 2016. In 2017, we were still a private company, made our first acquisition of the permitted past-producing Shakespeare mine. In 2021, we went public on the TSXV. And in 2022, we made our second acquisition of the Crean Hill mine, another non-core past-producing Inco mine, had produced 20 million tons historically. And from 2022 until 2024, we quickly moved that project ahead to become fully permitted, come out with a resource, sign ore selling agreements with Vale and Glencore, and complete a surface bulk sample. So our company had grown since going public quite substantially up until 2024, but that's when the real excitement started. And in September of 2024, we announced the signing of a definitive agreement to acquire the ex-FNX assets from KGHM in Sudbury. Assets that we knew very well, and we had built really our company to acquire these assets, recruiting many of my former colleagues from FNX into our team. So in February 28th, 2025, just a little over a month ago, we closed that acquisition to make Magna now a producing copper company with 4 fully permitted past-producing mines in the Sudbury Basin, as well as a portfolio of exploration companies. So it's a very exciting journey, but I think it's really important to understand the context behind how we got to where we are. There will be a number of forward-looking statements throughout this presentation, so please do your own due diligence. So for those of you who are not familiar with Sudbury, I'm going to just give a little bit of a background. It is a fantastic mining camp located about a 4-hour drive north of Toronto. It has a population of about 180,000 people. It has been mining for about 140 years in total, nonstop. It has all the infrastructure necessary for large mining projects and operations, including 2 large underutilized processing plants, 2 smelters, and then everything to support that, including an excellent university as well as 2 colleges to provide the skilled tradespeople and engineers and geologists needed. So Sudbury is a really great place to build mines, to discover new deposits, and to operate them. Because of the long history of operations in Sudbury, there is truly a social license to operate. The communities there not only support mining, they embrace it and they need it. And this includes our local First Nations communities, which are very much pro-mining and have built businesses around the mining industry, and they see the benefits from mining. But the reason why Sudbury has been an active mining camp for over 100 years is because of the geological endowment in the ground. Sudbury, I believe, has the potential to continue mining for at least another 50 years. It's truly spectacular geology. Since inception, we have built our company around 3 pillars of growth: production, exploration, and synergistic acquisitions. Now, with production, we have 1 producing mine, 4 permitted projects, so a steady growth pipeline that we can grow into what we believe will be a mid-tier producer in the next 3 to 4 years. On the exploration front, we have a lot of the former geologists that I worked with at FNX who had made multiple discoveries in Sudbury that understand this geology, and we have currently 5 drill rigs turning. We'll be bringing a 6th drill rig in shortly, so we believe great potential to make new discoveries and really meaningful material discoveries on our properties. And then with synergistic acquisitions, as I mentioned, we had made a number of acquisitions already in the Sudbury Basin, but we're not done yet. There are still other non-core assets in the Sudbury Basin owned by the major mining companies that we believe have great synergies with our existing infrastructure, and we are actively pursuing other acquisitions. You can never fully predict when these acquisitions can happen. They do take time, but there's definitely possibility in the next 12 months of announcing another acquisition. So this is a map of the Sudbury Basin. In black, you can see our McCreedy West mine, which is our producing mine. Next to it is the Levack mine. Levack is a spectacular mine, and I had the pleasure during my time with FNX at managing the operations at both of those mines. Levack is truly spectacular, a mine that's produced 65 million tons over a 100-year mining history, operated up until 2019. It's currently on care and maintenance. I was just underground there last week. And while I was operating that mine for FNX, quarter after quarter, we produced ore of 10% copper, 1% nickel, and 10 grams of platinum, palladium, gold combined. So very high-grade ore, spectacular mine, and it will be the next mine that we will be restarting. The Podolsky mine, another mine on care and maintenance, fully permitted. Our Crane Hill project was the one we acquired in 2022, and then our Shakespeare project, which was the first project we acquired, where we have permits and a feasibility study. So a great pipeline with a wide range of exploration properties around the basin. Our business model is to sell our ore to Vale and Glencore, and this is what FNX had done and KGHM had done since 2003. So both Vale and Glencore have large mills that are underutilized, and we have a very simple business model of mining the ore, sampling it on surface, driving it to their mill, dropping it off, and we have agreements in place to get paid. That allows a very capital efficient ramp up, and we do not have to build our own mill in order to continue to grow. As far as resources in the ground, we have 3 of our projects that have NI 43-101 compliant resources. We also have 3 other projects that have historic resources that we will be upgrading to NI 43-101 in the next 12 months. But of our NI 43-101 compliant resources, we have 48 million tons of indicated resource at these 3 mines, and we have, in total of those indicated resource, about 780 million pounds of copper, 742 million pounds of nickel, and 2.6 million ounces of platinum, palladium, gold. And these are at high grades. For example, at Crane Hill, our indicated resource is 3.55 copper equivalent. We have 18 million tons of that. At McCreedy, 9.3 million tons at 3.77 copper equivalent. And then our Shakespeare project, we have another 16 million tons at 1.31, and that's an open pit project with a low strip ratio. So great resources and potential to mine some very high grades within that. So the beauty of our business model, and then we're taking really a page out of my experience with FNX, is the McCreedy West mine that is now producing, and we've only had it for a month, so I can't speak specifically to production numbers and forecasts, but we will be coming out with guidance in the next few months. But we believe that we can take the cash flow from McCreedy West, reinvest that into the Levack mine, get it up and running as early as 2026, and then restart the Crane Hill mine and the Podolsky mine, and use this bootstrapped approach that all starts with successfully operating, generating cash flow from the McCreedy West mine. So we do have a lot going on. So I get asked, well, what are you focusing on? Well, we are laser focused this year in 2025 on getting the McCreedy West mine fully optimized and running at a production rate that we believe really respects that ore body. In 2023, it produced about 317,000 tons of ore at 1.6% copper plus nickel and precious metals. That's about half of the production profile it had when I was operating it through FNX. So we believe there's definitely an opportunity to ramp that up. So we are investing the capital this year, focusing on building out the mine, opening up new workplaces, and getting us set up for a very strong 2026 and beyond. At the Levack mine, we're currently drilling to support a restart plan, and we hope to have that restart plan completed in Q4 of this year, and that'll really foster and facilitate that restart we're hoping to do in 2026. And then we're evaluating the exploration properties we have that are away from the existing operations and prioritizing those targets as we identify them. So from an exploration potential, the McCreedy West mine has been operating for 22 years. It has a consistent track record of replacing reserves and resources year after year. We believe it's going to continue to do that. As I mentioned, 9.3 million tons of resources currently. We put out some results, drilling results, just earlier this week that kind of highlight the potential for high grade here. And there are many areas within the copper footwall zone that we are mining right now that have grades in excess of 8% copper over bulk mining widths. Now, again, we are working on increasing these production profile as well as increasing the grade back to similar grades that we saw during the FNX days, and we will be able to give more guidance on that later this year, but very exciting potential based on the drill results we've put out. At our Levack mine, I think we even have more potential. There's an area very close to surface, and Levack mine has been mining for many, many years and is on care and maintenance, but an area called the Keel Zone. And this is a high-grade copper footwall zone where we have also released some results this week where we intersected 24.6% copper and 5 grams of precious metals within 200 meters of surface, just in behind our main ore body there. And this is in an area where there historically has been other drilling done. We believe this Keel Zone has a lot of potential for expansion, and the down dip of this zone goes to where we mined at FNX, the Morrison deposit, where I said we had been producing 10% copper and 10 grams of precious metals quarter after quarter while I was operating that mine. So very excited about that potential. And then in between our McCreedy West mine and the Levack mine, there's 2.2 kilometers of this same prospective rock unit, the Sudbury Breccia, that hosts these high-grade footwall deposits that has very little drilling in it. Where it has been drilled, there's been high-grade intersections, albeit narrow, but 30% copper over 0.6 meters with some precious metals, 280 meters outside of the existing resource. So definitely potential for more mineralization, and we will be drilling this later this year. So we have about 200 million shares outstanding, about a $300 million market cap, an excellent roster, a mix of institutional and retail shareholders. Management and board, including myself, own about 8% of the stock, so we are very much invested in the company. And we perform very well, being one of the best performing stocks on the TSX Venture Exchange in 2024. As well, we've raised $54 million in the last 6 months in 2 separate financings, so we are cashed up and in a strong position to execute our growth plans. So why invest in Magna Mining now? I think there's a lot of good reasons. We're really just getting started. Now as a producing company, we believe that there are a lot more investors that we are opened up to and interested in looking at Magna. So that's what we're doing right now, and we believe there's potential for a re-rating. We have, as I said, 5 drills turning and a 6th drill coming, and that will, we believe, facilitate regular diamond drill results and assay results coming out throughout the course of this year. The ability to bootstrap and use cash flow to grow and organically grow, again, I think is a very strong indicator of the potential value within our company. That's not very often seen. And then again, the potential for new synergistic acquisitions of material deposits in the basin. So with that, I'll wrap things up. Thank you.